to Tata Technologies. Now, before we get to a conversation with Warren Harris, the CEO and MD of the company, let's get in, Puneet, to understand the quarterly performance and outlook, if any. Puneet.
Well, thank you for that. So the results were largely in line. It was expected to be a tough quarter for the company in terms of revenue, as well as the EBIT margins that have declined in the mid-teens. But the reason why we're seeing a green on the stock today is largely because of the management's commentary in the conference call, as well as what's highlighted in the presentation as well. They've gone on to say that the deal closure traction has actually improved from April going into June, and they're expecting that momentum in Q2 as well. Now, this will indicate a couple of things. One, for the company itself, that's a positive momentum, and the second, for the ER&D company as a whole, this could be the first sign of any kind of revival of deal closures as well as growth for FY26. So that'll be one of the key aspects to ask Mr. Harris on it. The other one is the JV with BMW. Now, this is going to be an integral part of profits also going forward for the company. How are they planning to scale this up efficiently over the next 2 to 3 years as a medium-term outlook? Because they're already employing more than 1,000 people in this particular joint venture. So how has that shaped up? And the third is in terms of traction from German OEMs, because they've highlighted that they've seen some of that in Q1. What could that mean? Because we've seen cuts from these players in terms of outlook for 2025. So has that started to change a bit? Those will be the three things to watch out for this conversation.
Thank you for that, Puneet. Now, Warren Harris joins in. He's CEO and MD of Tata Technologies. Warren, very good morning. Tamanna here. Always great to have you here with us on NDTV Profit. I'm going to start with your con-call comments. And of course, we'll go to your numbers and details there, including what's happening with service revenues, etc. But the outlook in terms of deal closure, what is the change that you're seeing there?
Well, let me start by saying that we entered the beginning of the fiscal year with a great deal of confidence. A lot of our customers had paused investment decisions last year, given the elections in the US and the runoff of EV incentives in Europe, and so there was a lot of latent demand that we were expecting to intersect with. The tariff announcements at the beginning of April, I think, interjected a certain amount of uncertainty.